So who do first home buyer grants really benefit? What are the overall impacts of negative gearing on this housing market? Will the lack of development in the Byron Shire continue to put pressure on housing prices? How much pressure does immigration put on our housing market? Is this cost of living crisis going to crash the Australian housing market? Moving forward from here, I can see that Welcome to The Real Deal, where we'll cut through the property noise. I'm Gary Braisner, Byron Shire's go-to agent. Here you'll get real market insights and selling tips to help you make smarter decisions. Ready to go? Let's get real. Are we on the verge of the next boom? Or are we on the verge of a major real estate bust? Depending on who you listen to, there's arguments for both sides. In my 25 years experience, I've been through a lot of highs and lows, peaks and troughs in real estate. In Western Australia, I went through mining booms, I went through the GFC, I've been through COVID. Each of these potential busts have all turned out to be fairly flat-lined, couple of years before returning to growth. Stick around to the end where I can give you my insights into where the Byron Shire and the Australian real estate market heads from here. So let's dive into some of the factors that support the real estate market in Australia. Government incentives for first home buyers. Anytime there's any sign of collapse in the market, the government in power of the time would generally like to throw some incentives at first home buyers. And as much as these are seen potentially as beneficial for the first home buyer, in my opinion, they're beneficial for the market. They don't really help the first home buyer. All they do is push the prices up of the housing market. If you're giving $25,000, for instance, to a first home buyer, that first home buyer will take that money, that $25,000 to the bank. The bank will then therefore see that they have a higher deposit and their borrowing capacity becomes improved. When you have this on a major scale, thousands and thousands of first home buyers in a position to borrow more money, this is likely just going to push the housing prices up and subsequently be of very little benefit to future first home buyers. Negative gearing has been around for years and certainly has been a poison chalice for previous governments to address and potentially get rid of. Negative gearing is a great incentive for investors to purchase investment properties in the market, and this will continue to support the market while we've got it. Negative gearing for investors means that they can claim all their interest, they can claim any repairs or maintenance to the property, strata fees, rates on the property, which helps them to get a beneficial investment in the long term. The impact of negative gearing on the market just means that the market is continually supported by the government through these tax incentives for investors. And of course, capital gains has been huge over the last, certainly my lifetime in real estate, 25 years and beyond that. The capital gains in real estate have been a huge incentive for both investors and owner-occupiers. There's no capital gains tax on a property if you are an owner-occupier of that property, which is a huge incentive to own your own home. As an investor, there is some capital gains, but there's certainly some discounts on those capital gains that have been introduced over the years, which again still continues to support the investment of housing for investors. We continue to have high numbers of immigration coming into Australia. This will continue to support with the lack of housing. The development is very slow to get developments through, and the Australian government are very slow to release new land and allow developers. There's lots of red tape that developers need to get through. Build costs are outrageously expensive in Australia and everywhere at the moment, with the inflation on raw materials and building materials, along with wages for tradespeople. Certainly in the Byron Shire, what we're seeing is the cost of building a new home versus buying an established home. The established home is still winning by far. If we look at raw materials and building materials and trades costs to build a fairly standard type of property these days, you're not likely getting any change out of $600,000 at the very bottom end, but more likely closer to $1 million to build anything substantial in 2025. Just quickly, if you're thinking about selling but aren't sure what your home's worth, I've got you covered. I offer a free property strategy call to help you plan your next move with confidence. Check out my number in the show notes to learn more. Now, back to the episode. So if we're not building enough homes and we're getting lots of immigrants still coming into the country, then obviously we're still going to have a lack of housing, which is going to again support this housing market. Obviously at the moment we've got a cost of living crisis, we've got a lack of affordable housing, we've had massive inflation, there's a lot of homelessness in the Byron Shire, a lot of people struggling, and really unaffordable to purchase a home for a lot of families in this area. We still have enough people here in the market in a position to purchase properties. Given the 6% interest rates and the price of housings, for me it does sort of defy logic, but it is continuing to march forward at this stage. Real estate in Australia has always seemed like a sport. Certainly in my 25 years, people are always interested to know, Gary, what's the market doing? And of course, if a market's going well, people are generally really happy about this. It's interesting that this is a commodity which is shelter for everybody. We're always happy to see it going up, whereas if petrol prices, which we all need, if they're going up, then this is seen as a negative. If we have to pay more for water or food, then obviously this is a negative. Yet with real estate, the Australian housing market has always been treated as a sport by people, and they're always excited to see that the market's doing well. We've certainly noticed quite a substantial change since the February interest rate cut in the Byron Shire. Todd and I had a huge run through February, March and April, moving a lot of homes. We had the further interest rate cut last month, which did continue to help, but we do feel like a little bit at the moment that the market has leveled, and potentially that is seasonal. Certainly moving forward, it feels like we will see some more interest rate cuts this year and into next year, and we're anticipating that that's probably going to be positive for the real estate market. Certainly in the real estate market, there's always people who are making money and commodifying what the market's going to do. Harry Dent, I think for my whole real estate career, has been predicting that this market is going to collapse. And just like a broken clock, once every 24 hours it's correct. At some stage, Harry could be correct, but certainly he's been on the wrong side for a very, very long time. I believe we're returning to a much more balanced market. We had a massive rise during COVID in the Byron Shire. We saw upwards of 60% increases over 2021 and 2022. 2022 and to 2024, we certainly saw at least 20% to 30% come off all of these properties, and we've had another little bounce in 24, 25. We bounced up another 10% from there. Moving forward from here, I can see that we're likely moving into a more balanced market, that we'll still see these little peaks and troughs in the market, but barring another COVID or another mining boom or another GFC, we will move into a more balanced market at gains of 5 to 7% per annum, keeping up with inflation and maybe a little better. So is this Australian housing market collapsing? Well, certainly not in my opinion, and not from what I can see on the ground, but predicting anything further than 3 to 6 months in advance in this global market with the Trumps and Ukraines and Irans and all of these external factors, it's pretty hard for anybody to predict where we are in 12 months from here. If you got value from today's episode, make sure to subscribe so you'll never miss property tips and market insights. For more support, check out the number in the show notes for a free strategy meeting. And don't forget to follow me on socials at Byron Lifestyle. Until then, see you at the next one.